Welcome back. It is Wednesday, January 21, 2026, and if you've glanced at your portfolio this morning,
Right.
specifically the aerospace part, you know why we're here.
Oh, yeah.
The entire sector is just ripping. I mean, we are so far past the science fair stage. We are watching the industrialization of space happen in, real time.
It really does feel different this time. For so long, new space was it was a promise, right?
Right.
And now here in early 2026, it's a P&L statement. We're past can they do it?
Yeah.
And we're deep into the who is going to dominate phase.
That's the whole game now. And the backdrop is, it's a fever pitch. You've got these constant rumors of a SpaceX IPO, maybe mid-year, and that's just lifting all the boats.
It's a valuation effect.
Totally.
Yeah.
Plus, you can't ignore the defense spending pivot. The Pentagon isn't just asking anymore. They are demanding this stuff yesterday.
Well, the geopolitical tension is the quiet engine behind it all. I mean, the race with China for the moon, for orbital supremacy. It means the U.S. government can't just rely on the old guard. They need speed.
Which perfectly sets up our matchup for today. We're going to analyze the two companies that are sucking up all the oxygen in the room. In one corner, you have the launch utility Rocket Lab, ticker RKLB.
The consistent one.
And in the other, the lunar infrastructure play that just completely transformed itself. Intuitive Machines, ticker LUNR.
Rocket Lab versus Intuitive Machines. Yeah, that's the debate on every screen right now.
And our mission today is to generate a tactical report for you. We're going to strip down the investment theses, we're going to expose the risks, and try to answer the big question. If you have cash to put to work right now, where does it go?
It's a tough question because, on the surface, they look like they're in the same business.
Right, they're both new space.
But when you actually look under the hood, they are operating with completely different centers of gravity.
Okay, let's start right there, the strategic difference. Because for a long time, Rocket Lab was just, the other launch company. But that's not really fair anymore, is it?
No, not at all. That misses the entire picture. Rocket Lab's strategy is all about being the utility of Earth orbit. Think of them as trying to be the end-to-end industrial platform for LEO.
Okay, so more than just rockets.
So much more. Yes, they have the Electron rocket, that's sort of their FedEx truck, but they're also building the satellite, the box itself, and all the components inside it.
That's the vertical integration I was reading about. I mean, the amount they build in-house is kind of wild. Reaction wheels, solar arrays. They're not buying that stuff.
That's the moat. It's not just about cost savings, it's about control. They can go to a customer and say, don't just pay us for a launch, we'll build your satellite, launch it, and operate it. This is a one-stop shop.
And the cadence proves it's working. How many launches in 2025?
21.
21 missions. In an industry where delays are basically the default setting, that kind of consistency is currency.
It's how you build trust. They've become the blue chip option. If you're the Space Development Agency and you need something in orbit, you know Rocket Lab is going to show up.
Okay, so Rocket Lab is the industrial utility for Earth. Now, let's pivot. Intuitive Machines. Until, a week ago, I had them filed away as Moonshot Inc.
Right.
They build the landers, they go to the moon. Simple story.
Right.
But that story just got a massive rewrite.
A huge one. I mean, their center of gravity was the infrastructure of cislunar space, the moon. But they weren't just planting flags, they were focused on building the economic pipes.
The pipes, you were talking about the data contracts, the NSNS deal.
Exactly, the Near Space Network Services contract. This is so important. They aren't just selling one-off landers, they're building the communications network around the moon. It's a telecom play.
So like building the cell towers for the lunar economy.
That's the perfect analogy. And that's high-margin, recurring revenue.
Which is a great long-term bet, but it was still a future bet. Until January 13th.
January 13, 2026, the day everything changed for them. That's when they officially closed the acquisition of Lanteris Space Systems.
And just for context, Lanteris is the company formerly known as Maxar. This is not some small startup. This is heavy iron. They build the giant geostationary satellites.
Huge government communications platforms, yeah. This acquisition is a massive strategic shift. Intuitive Machines just went from being a specialized lunar company to a full-blown space prime.
They now have the factories to bid on these enormous Department of Defense contracts for satellites that orbit Earth.
Right, so they basically just bought their way into Rocket Lab's neighborhood.
Wow.
Coming at it from the heavy manufacturing side, but now they can build those big national security constellations. It bridges the gap between their, moon dreams and today's defense reality.
Okay, so this is where it gets really interesting. Let's talk numbers.
Yeah.
Because looking at the valuations, the market is treating these two very, very differently.
Yeah. the gap is glaring.
Let's start with Rocket Lab. RKLB. It is trading at, I don't know another way to say it, a nosebleed multiple. We're talking a forward price to sales at around 26.
26 times.
That's software as a service territory. For a hardware company, how is that justified?
Well, it's undeniably rich. You are paying what we call a scarcity premium.
A scarcity premium. What does that mean here?
It means the market is betting on two things. First, Rocket Lab is the only real public proxy for SpaceX. If you're a big fund and you want exposure to the launch economy, you can't buy SpaceX, so all that capital funnels into the next best thing.
Okay, so it's a liquidity funnel. That makes sense.
And second, and this is the big one, the market is pricing in the success of the Neutron rocket, their new medium-lift vehicle. The current valuation isn't about the small Electron rocket anymore. It's about the belief that Neutron will finally break the Falcon 9 monopoly.
That's a lot of hope baked into a stock price. But they do have the cash to pull it off, right?
Oh, yeah. Their balance sheet is a fortress. Over $1 billion in cash and liquidity. They have the runway, and the growth is there. Q3 2025 revenue was up 48% year over year. So it's real, even if the multiple is scary.
Okay. RKLB, the expensive high-growth darling. Now, Intuitive Machines, LUNR, trading at roughly 6 times forward sales.
A massive, massive discount.
It's the value play in the sector. But why? If they just bought Lanteris and their revenue is set to explode, why discount?
That's the whole thesis. It's the catch-up trade. The market, I don't think, has fully done the math yet. When you add Lanteris, Intuitive Machines' pro forma revenue jumps to over $850 million a year.
Wait, hang on. Pause right there. Rocket Lab is doing maybe, what, 600, 700 million annualized? And you're saying LUNR is now at 850 million?
Yes. On a pro forma basis, Intuitive Machines is now a larger company by revenue than Rocket Lab.
And it trades at a quarter of the valuation multiple.
Precisely. And that is why you're seeing so much chatter about it. The argument is that the market is still pricing LUNR like it's just a risky moonlander startup.
It's ignoring the fact that they're now a major defense contractor.
Exactly. So the thesis is simple. If the market just re-rates them to, say, 10 or 12 times sales, still a big discount to Rocket Lab, the stock could double or triple.
That's the path to $100 you see people talking about.
That's the bet. It's a bet on multiple expansion.
Okay, but markets aren't stupid. There has to be some hair on this deal. Let's talk risks, because that discount exists for a reason. What keeps the LUNR bulls up at night?
I think it's indigestion. Integrating a huge acquisition like this is so dangerous. You have Intuitive Machines, which is this fast, scrappy startup culture.
Move fast and break things, right?
Yeah. And you just merged it with Lanteris, which is a legacy aerospace prime.
The culture collide.
It's deeper than that. It's an operating system mismatch. Legacy space runs on cost-plus contracts, long timelines, tons of paperwork. New space runs on fixed price. You deliver or you go out of business. Trying to force that culture shift is, well, it's how great deals fail.
So the risk is it looks amazing on a spreadsheet, but it grinds to a halt on the factory floor.
Yes, and there was dilution. They paid for part of this deal with stock. And you can't forget the mission risk. IM-3, it launches next month, February 2026.
That's a total binary event.
Landing on the moon is still one of the hardest things we do. If that lander tips over or crashes, the stock is going to get crushed. A Rocket Lab launch is routine now. A LUNR moon landing is still a white-knuckle event.
That definitely explains the discount. Okay, but Rocket Lab isn't bulletproof either. You said it yourself. Priced for perfection.
That's their #1 risk. The stock is technically overbought. When you're priced at 26 times sales, any stumble, any delay, it gets punished. And the Neutron rocket has slipped. The debut is now Q1 2026.
And every month of delay just burns through that cash pile.
It does. And there's a bigger, longer-term threat, too. Starship.
Ah, yes. The elephant in the room.
If SpaceX gets Starship fully operational and the launch costs are as revolutionary as they claim, does the market even need Neutron?
It's the argument that Rocket Lab is building a better horse and buggy right as the car is being invented.
It's a valid concern. The bet is that the Department of Defense will always demand a second lane. They won't let SpaceX have a monopoly. But if Starship's economics are that good, Rocket Lab's margins could get squeezed hard.
Okay, so we've got the landscape. RKLB, the pricey, proven industrializer. LUNR, the high-stakes, undervalued turnaround story. Let's get to the verdict. I have fresh capital. It's January 2026. What do I do?
It really, truly depends on what kind of investor you are. What game are you playing?
Okay, scenario 1. I'm a conservative growth investor. I want space exposure, but I can't afford a 50% drawdown.
Then you buy Rocket Lab, RKLB. It's the safer bet. There's a valuation floor there because of the cash, the cadence, the prime status. The big institutional money flows there first.
Okay. Scenario 2. I'm the aggressive value hunter. I'm looking for the mispricing, the inefficiency in the market.
Then you have to look at intuitive machines, LUNR. The asymmetry is just wild. You're buying a nearly billion-dollar revenue stream for a fraction of its peers' value. If they integrate Lanteris successfully and they stick that landing next month, the upside repricing could be violent.
We could be talking a double or a triple.
Potentially, yeah, if the entire narrative shifts.
So is there a middle ground, a way to play both?
Yeah, the barbell strategy. And honestly, this might be the smartest play for anyone who really believes in the sector long term.
Explain that. Why not just buy a space ETF?
Because most of those are filled with old guard names like Boeing and Lockheed. You're not getting that pure play growth. The barbell strategy means you buy RKLB for stability and that proven execution.
The anchor.
The anchor, exactly. And you buy LUNR as your high beta call option, a levered bet on the lunar economy and that valuation catch-up trade. You're balancing the scarcity premium of one against the value discount of the other.
That makes a lot of sense.
Because at the end of the day, both of these companies are riding the same mega trend, and that's the rise of the new space primes.
That really feels like the big story here. We are watching a changing of the guard.
We are. The U.S. government is actively funneling billions away from the old, slow contractors and into these more agile players. They're choosing the winners for the next 30 years right now.
And Rocket Lab and Intuitive Machines seem to be the two they've chosen.
They're building the new industrial base. Doesn't matter if it's missile tracking in LEO or nuclear reactors on the moon. These are the companies building the infrastructure for the rest of the century.
It's a fascinating time. Just remember, everyone, February is going to be a big month with that IM-3 mission, so buckle up.
Volatility is the price of admission in this sector.
It certainly is. We'll leave it there. Thanks for joining us on this analysis of the new space race. Continue to watch for our next release.